Today, gold broke another all-time high with very big volume, catching everyone by surprise as there were no news or triggers. Hi, my name is Ernesto and I'm a Forex algo trader with 5 years of live trading experience, consistently achieving results using my proprietary EA. Today, I want to help you build your first financial model using the MetaTrader terminal, which is free, along with free tick data. The value of this model is that you can develop and gain a real statistical edge over the market. All you need will be a MetaTrader 4 terminal. You can use raw Forex, so we have the same terminal and data. It changes from terminal and servers depending also on the liquidity provider for the broker. So it's very important to have the set files optimized for your broker. Then you have to open a demo account for the terminal. You can use the same raw Forex and also use, I recommend standard accounts with 1 to 500 leverage, and the capital or balance doesn't matter. We set that in the strategy tester. Also, you will need an algorithm that basically is the code that will hold the strategy that you want to test. Personally, I use grid, hedge, multiplier, and average pips and closing by average or pips for the inputs of my EA. Without using linear TP and stop loss, I use trailing. It's smarter. You'll see after the testings in different ranges and years that TP and stop loss really is losing you money, and it's very lazy risk management at the end. So it's better to use just average by knowing your margin and how much your account will hold. In building an investment model, we will start by stress testing it against the worst economic scenarios possible, initializing the EA on the worst day possible in a 20-year span of historic data. This will be from 2004 to 2024, identifying these periods as the most extreme moves in the history of the gold market. The goal is to stress test the expert advisor in these scenarios to establish a statistical edge, creating a model capable of sustaining economic crisis, pandemics, debt crisis, and other volatile scenarios. By having an investment model that can generate passive income over the long term, you truly give value to your money. If your EA cannot only survive but also profit within these ranges, it indicates a robust strategy that can be forward tested without any issue. Key points to note will be maximum drawdown is crucial. It measures the maximum risk our investment has faced. We aim for 99% or less. Also, stress testing involves pushing the account to its limits by applying margin pressure in its war economic scenarios, the ones that we already shared. This enables us to understand the max margin limits the account has versus the balance and leverage. Also, the principle is that the maximum drawdown cannot exceed the initial deposit, and ideally our returns should exceed the risk taken. However, having a model that works in these conditions, it's impressive enough. So it's important to understand that also 90% of the ticks from the broker that they gave for free is more than enough for real trading. I provide facts, not work, so I've developed my EA and model using only MT4 and 90% of free ticks. So it's really all you need. I've been profitable since 2021. I have all my broker statements. I've repeatedly verified the results through the backtest against the demo tracked accounts, and they consistently give not the same results, but very similar. Like if you're blowing your account for a difference in 1% or less, it's because the strategy is wrong, not the brokers, So factors like spread, slippage, and broker server conditions may vary or change the results. Also the liquidity providers, because the quoting won't be the same in every broker. But reality is that overall the results will be almost the same. So it's precisely why we are going to develop this model, because anyone can do it and it's for free. Anyone can have this statistical edge for free. You don't need probabilities anymore. You don't need a mentor telling you that this will work based in what. You don't know what works because they don't even know. So with this, we will have data to show that the strategy can sustain economic scenarios where price was crazy. Not everyone was making money in this situation, and you will create a model that will make money. So you will only require an EA for the back testing. So in case you need some, I have similar EAs that can work at least for the model, and I will share them for free, no problem. Just join my Telegram group and hit me a message and I'll share something so you can test. There's multiple strategies. I use grid, but there's one-shot EAs that open only one trade based in different conditions. There's some that open one trade, but in different scenarios trigger grid or progression. So it's a matter of knowing the needs of every trader. So let me show you the models that I have so far for my EA so we can continue. Okay, so this is a very important and simple thing that we can do. Everyone can do it. Let me just move this because my ugly face is covering one part of the Excel. So here we have it. This is pretty much my model. Well, not my model, but this is what I'm testing right now for the investing model. These are the worst ranges possible for your investment. Like, these are the days that you started trading or investing today, and most likely your investment will go to zero. So the idea is that to stress test in the worst possible scenarios and get our margin lower than 100%, well, our risk. So we have 2013, a lot of 2011, that mainly was the debt crisis. We could say the consequences of 2008 crisis, the housing crisis, all of that issues that trigger a lot of other and worse. It was like a domino effect. Have 2011, we have 2013, two ranges that were the craziest, we could say, drops in modern gold history because it was very unexpected. I think, well, I don't think there's news. We have data. We don't guess or we don't try to get the probabilities right, you know? So let me show you. This is the drop. It was very unexpected. So if you can manage to trade that with efficiency, trust me, your model is very, very good. This is 2011, for example. It's another huge drop. So another thing that it's very important to mention right now is that this model will be based in counter trending. Why? Because it's easier. You just take the probabilities away of trying to guess or trying to very casino style try to predict the trend. When you are counter trending, you only just watch the markets. You just need to watch them daily. But if not, you can just go back in time and see that even though in major crises like 2008, 2011, price gave retracement. So you're chasing that. Even though you are not a counter trend trader and you feel the risk is not for you when counter trending, trust me, you need your model to be counter trending first, because you don't know then if you're trying to predict the trend, if that's working. You feel like you need to be very, very focused in what works, like in what you can measure and what really you can use as data for the future, because we are not using strategy tester to predict the future, but rather we want to understand the EA in other past situations. Like, it's very hard to have another COVID. So if you are able to trade COVID with your strategy tester, if it happens again, you know that you won't have a lot of issues because you already optimized your EA based in another similar scenario. Like, I was backtesting my EA based in 2011 and I traded 2021 to 2024. Like, that's this 28, let's say this was COVID, this is 29. So all of this is what I traded live based in all this information. So we could say it's very solid to use the data that you have available, because all these ranges, what gives you is data. It gives you a statistical edge, because if you can in different scenarios and ranges provide value to your money, you will do it in the future also. So let's keep it moving. This is 2020 and all this mess I have right here, sorry, it's my current live trading range. So that's why it's a mess. I daily check this chart. So let's go back to the Excel. So what I do is I create a basic model. I back test it. As you can see, we go here. I'm testing 2020, that currently this is my worst based on total net profit and risk. As you can see, I have $273 as profit versus my $909 risk, so that's not very balanced. We went to Excel. We just need to track very simple in this process, like we just want to know if we make money and how much based in the risk. So that model is making 0.25%. That's my risk reward. So what I do is to create a very good model and then start working on it. So we could say this is the first one, the second one, third one, and I'm currently working in the fourth one. So as we can see, in an average of my RR, I have a 5.10 with this one, 3.3, 2.08, and 5.79. That's why I'm working with this one, because the average and the sum of my risk reward, it's 5.79. That's what I'm closing in all these ranges, and this is my average, 0.83 in worst case scenarios. So the idea is to now level up this model, have a better one. That is what I'm doing right now. I use 2 terminals. I need to get better results than this one, and then we go on. You know, this is very easy, it's very simple, it's for free, anyone can do it, and that's this base of any sauce. And then if you want to create advanced models for trading or not counter trend and then add indicators and many other styles, you can, because you already have something that you know that works, that holds economic crisis, that pretty much something that it's good. It's not a mentor telling you that, yeah, hey, trust me, I made a lot of money in 1980. It's like markets were not even moving in those days like they move today. So you really need to start using and leveling up algorithm. In this case, algo trading is just better than anything. So just level up. Use every tool available at your advantage. And trust me, free is better. You can do everything for free.